Hello everyone, welcome to Accounting 210. In this video, I will talk about one example of Chapter 3 job costing. So in Chapter 3, the main two tasks is how to get your predetermined manufacturing overhead rate, and then how do you do the journal entries. So we use the problem 44 as an example. I'm sorry, I highlighted some numbers. So let's read this question and then I do my work here to show you the step by step. So first thing, it asks you about all the journal entry for transaction A to transaction E. So we write transaction A, we said you bought the material on account. So remember your textbook, we have purchased your raw material. Basically, you increase your raw material inventory, that's the assets. We said when assets increase, it's debit. And then you have the liability because you purchase on account. You don't pay money, you will pay the supplier later. Similarly, we do us is the same. So we have the inventory, or you say raw material inventory, which is 210,000. And then you have account payable, right? 210,000. And then the second one said part of 178,000 material were used, and then 143 unspecific jobs. So when you say unspecific jobs, that means you can trace that. So that will go to our work in process, and then that is our raw material, right? 143,000 can be traced, and we said that we totally used the inventory. When we bought inventory, it's debit. When we use inventory, it decreased, so it's 178,000. Right? Similarly, as your textbook, use of direct material, so you increase your work in process, you decrease your raw material inventory. You will say, hey, our debit is not the same as credit. What happened? You used 178,000 of the raw material, but only 143 goes to the work in process because that goes to the specific. All the others cannot be traced. They will go to your manufacturing overhead, which is the difference of 178,000 minus 143,000. So that gives you 35,000 as the indirect material, right? As the indirect material goes to manufacturing overhead. Okay, so the third transaction said, now it's talking about direct labor. So you have used the people to work for you, 245,000, and then 220,000 can be traced. The others are indirect, and they are for the factory, right? So we said for the, this is the indirect material as we talk about here. So direct material goes to work in process, and you decrease your inventory. Indirect material, you goes to our manufacturing overhead, and you also decrease your raw material. And then direct labor, we said direct labor goes to work in process, and then indirect labor goes to manufacturing overhead. So go back to this question, you total spend 245,000. So you have this salary payable, right? So you have this salary payable, 245,000. And they said 220 goes to specific, can be traced, right? So it's the same as your direct labor. So it goes to work in process, which is direct labor, which is 220,000. And then the indirect labor that cannot be traced, the indirect labor will go to our manufacturing overhead. So that is our labor, which goes to our manufacturing overhead, goes to our manufacturing overhead. How much is it? It's the difference of 245,000 minus 220,000, because your total of debit has to be the total of credit. So that gives you 25,000. 220,000 plus 25,000 gives you 245,000. Okay, so I just put it here, and then the next transaction, transaction D said you have depreciation on plant, you know, and then so that gives you an idea. It's manufacturing overhead, and then you also have plant utility 8,000. So that goes to our manufacturing overhead. Remember, in the textbook that are the manufacturing overhead costs, right? So you have like a depreciation, and then you have the utility. Those happen in the plant, so that goes to our manufacturing overhead. So first part, manufacturing overhead from your equipment depreciation is 16,000, and then you also have the utility, which is 8,000. You can just say that is 24,000. You can just put one manufacturing overhead 24,000. That's fine. I just put this note kind of, so later I will know is what type of manufacturing overhead. And then for the depreciation, we have to credit accumulated depreciation. Accumulated depreciation. I'm not going to write the full name. It's the accumulated depreciation. So that's a counter account for our equipment. When it increases, we put the credit, which is 16,000. We also have the utility payable because we are not going to pay, which is 8,000. Next one, last transaction said 74,000 manufacturing overhead was allocated to specific jobs. So now we allocate at the end of the period. You know, we got we use manufacturing overhead actual as a pool to store all of the manufacturing overhead, indirect material, indirect labor, and overhead. Then we can allocate this manufacturing overhead to the jobs. When we allocate, we can allocate to specific job, so that will increase our work in process. So that is allocated manufacturing overhead, right? A question said how much we can allocate is 74,000. How do we get this number? Is based on predetermined rate, which will be discussed in the next video. But the question told you directly, so we allocate 74,000. And then when we allocate, we debit the work in process, and then we decrease the manufacturing overhead because it's not stored in that account, it's allocated to the specific job, which is 74,000. So that is basically very similar with your textbook. Make sure you know all these transactions. Those are kind of a basic transaction. And the next question talking about, hey, is the manufacturing overhead over allocated or under allocated, right? We said we do the T account. So you have a manufacturing overhead. The left side is always your actual. The right side is your allocation, allocated. So our actual is debit side. You have this from raw material 35,000, from the labor 25,000, from this equipment depreciation utility 24,000. I just put 24,000 there. So total is 84,000 of the actual, but you only allocated 74,000. So actual is more than your allocation. So you under allocate, right? You under allocate. You didn't allocate enough. And then we said the actual is a temporary account. We have to zero this at the end of your accounting period. So in order to make this, we have to credit our manufacturing overhead. We have to credit 10,000 extra here. So we credit manufacturing overhead 10,000. We debit the cost of goods sold 10,000 to make the adjustment journal entry. I know you may not like the adjustment journal entry, but this is how do you adjust the under allocation or over allocation. So it's similar here when you do the adjusting closing your overhead. You have to decide for your textbook. Actual is 25,000, allocate is 24,000. So very similar with us. You under allocated 1,000 here. So you have to credit your manufacturing overhead. Textbook is 1,000, our case is 10,000, and then you debit the cost of goods sold. So basically, you credit that account, you credit 10,000 more, so your debit is 84,000, your credit will be 84,000. So you zero out this account. Okay, I think that's all for our first problem for the first part. Make sure you know the general idea of journal entry, and then how do you decide under allocation or over allocation, and just know how do we do the adjusting journal entry. Okay, I hope you enjoy. Today I'm using this two screen. I hope you enjoy that. So we can show your textbook, we can show the question, we can also show my notes. Let me know if you have any question or any suggestions. Thank you. See you in the next video.